Hello, everybody. This is Greg Gossett, and today is Saturday, February 26th, 2022. And thank you so much for coming and joining my Gossett Trading and Mentoring weekend update of my trades from the previous week. Hope you're doing well. Hope you are staying safe. It's been an extremely volatile market, to say the least, with the Russian and the Ukrainian situation, and the market has been all over the place. It's been very volatile. It's kind of a scary time to trade, but then again, it is always kind of a scary time to trade. So what we're going to do on this podcast today is we are going to do a few things. First of all, we are going to review the trades that I entered or exited last week. We'll talk about when I bought them, why I bought them, and how I am going to manage them going forward. I do have trades, and I did have trades on the daily charts, on the weekly charts, also on the monthly charts. So we'll go through all of those, review those, and after that, we're going to talk a little bit about trader psychology. Trader psychology really, for sure, everyone, is the most important skill that you can ever develop in trading. Yes, you have to learn about technical analysis, support, resistance levels, entries, exits, emergency stops, end of day stops, profit targets, overhead resistance levels. You do have to learn about that, but that is really not the hard part. The hard part is after you've created a plan using the technical analysis, whether or not you can stick to your plan. And honestly, that is the one determining factor that is going to determine whether or not you're going to be a long-term profitable trader. It really is. The trading approach, the system that you use, it's not that important. I mean, it's important that you let your profits run, cut your losses quickly. That, of course, is very important, but the ability to follow that plan is the most important, because I've been trading for over 25 years now. And whenever I get to the point where maybe I have an impulsive trade or I do something that I'm not, I always seem to regret it or pay for it. I mean, I'm just being honest, and I'm sure a lot of you have gone through that as well. When I just go on autopilot, take my approaches, take my entries, they're going to do what they're going to do. But if I can just follow those without being distracted, or without going, oh, that's a nice profit, I'm going to probably just take that one off right here, or oh, it's lower, and but I think this is it, I'm going to hold on to it. It just never works. It works every once in a while, but in the long run, it does not work. So if I can make a plea to all you traders out there, please follow your process, and whatever it takes, whether that's getting your husband and your wife or your partner, your boyfriend, your girlfriend involved, showing them what you're doing, having them help you be your risk manager. I think it's a great idea, because it's one thing to do something alone by yourself, but if you have someone watching and following your trades, it changes the dynamic. So just a little bit of a suggestion out there if you are struggling with following your plan. If you're not, congratulations. That's what it takes, and very proud of you. So after we go over the current positions and the closed positions that I had last week, we'll turn to trader psychology, talk a little bit about that, because of what I just said. It is extremely, extremely important, and that's why I like to talk about trader psychology on each podcast episode. One of my good friends, Frank, is a poet, and he is also a trader, and he writes a poem every day that he posts on Twitter. And I love reading his poems. When I had the live stream podcast, he was there every day, and he wrote a poem every day. What a talent. But we'll also do a poem from Frank. After that, we are going to go down through each stock in my watch list. We are going to go through them one by one. We're going to take a look, and I will try to review each chart, tell you what I'm looking for a possible trade for next week. All right, and hopefully this is helpful. Hopefully, I know it's not in real time, But we can look at charts, and I think it's a good way to learn about looking at charts and being patient. And when you look at a chart, if the trade's not there yet, it's just not there yet. But I will go through each chart and try to point out, is there a trade close, and what I will be looking for going into next week. All right, so I have to run the U.S. legal disclaimer. It's going to take about 40 seconds, so I'll be right back. Hang tight. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, well, let's get started. Here we go. This is a trade that I took last Thursday on the 24th of February, and it's been a great trade so far. And let's take a look. This is Goldman Sachs, and what were the signals? Well, the signals were an under 30, over 30. That's a deep dip buy trade trigger. When the price goes down, 30 RSI tends to hold a lot of the time, not all of the time. Make sure we're clear on that, but it does tend to hold. There are buyers that come in at the 30 RSI level, and on Thursday was the big drop down day when we had the invasion started. It went way under 30, and then it closed back over 30. As a matter of fact, if I go to that day there, it closed at 33.13. So it went deeply under the 30 and then closed back over. So buyers did come in at that level. So I did buy on Thursday at 339.90, and it also rejected the negative third ATR channel. The negative third ATR channel tends to hold about 92% of the time. It either stops going down and moves sideways or bounces back up, and so that's a key level that I'm looking for. So a confluence of signals, an under 30, over 30 on an intraday basis, also rejected the negative third ATR channel. You can see I have two lines here. This is my emergency stop, 320.68, and I always have two stops in my trading. I have an emergency stop and I have an end of day stop. The emergency stop is there to get me out for a maximum dollar loss. And so let me take you through this. I hope this is helpful. But how I do this and why I use excuse me, the two ATR for my position sizing is because it takes into account the volatility of the market. If the market's volatile, going up and down, the volatility is greater, and therefore the math formula that I use helps me determine how many shares to buy. And if the volatility is higher, I buy fewer shares. If it's larger, if the volatility is higher, I buy fewer shares. If the volatility is lower, then I buy more shares. And a lot of traders do not adjust their position size on volatility, but you need to, because if the volatility is higher, that just means the expected move is larger, and therefore you need more, or you need fewer shares. And then I also have an end of day stop. An end of day stop, in this case, I took the trade because it went under 30, over 30. So if it reverses and closes back under 30, I'll just go ahead and get out. Orange line up here, this is my 1.5 ATR trailing stop from entry. Whenever the price gets to that trailing stop level, then I go into trailing stop mode, which essentially means that I will, if I get a close below the previous day's low, I will get out of half of the position. So as far as position sizing goes, let's just use a hypothetical $100,000 account. A good rule of thumb is on any one trade to risk a maximum of 1% of your trading account. So if it's $100,000, 1% of that is $1,000. And all I do is I take $1,000, divide it by the value of the 2 ATR. At this point, it's 1916, divided by 1916. It would tell me to buy 52 shares. Now, if the average true range was half of this, like just basically under 10, it would tell me to buy twice as many shares because the volatility was not high. But because the volatility is high, I use whatever the 2 ATR value is at the time, and that would tell me to buy 52 shares. So whenever I get into a trade, first of all, I need to have the signal. The signal here was an under 30, over 30, and on top of that, a rejection of the negative third ATR channel. I position size, as I just mentioned, I take 1% of my capital divided by the value of the 2 ATR. That tells me how many shares to buy. And then on the upside, I have my trailing stop level, which is 1.5 ATRs above my entry price. Now, going back to the $100,000 and the 1%, $1,000, I am an end of day trader. So if my I take my stops, or I generally get out of my positions at the end of the day because I feel like the end of the day price is the most valuable. And the reason I say this is that during the day, you have the day traders and the algorithms that are in control of the market. At the end of the day, the large financial institutions come in, they're dealing with the most money, they have very smart people, best information, best technology, and the closing price is the most important price in my opinion. So I want to make my buying and selling decisions based upon that closing price. However, I need to have a stop. I need to have an emergency stop in there in case I can't wait till the end of the day, because I could have bought this here at 339.90 and my end of day stop would be a close under the 30 RSI. But if it moved 2 ATRs from my entry price, it could keep going down. And if my maximum allowed loss on any one trade in this hypothetical situation is $1,000, then if I'm down 2,000 or 3,000 or 4,000, I'm like, well, it's not the end of the day yet, so I have to hold on. No. You have to have a dollar amount on any one trade that if it all hits the fan, you're like, look, I've already decided that 1% of my capital is the maximum I will ever lose. And so had this, it went up on Friday, but had it gone down and got to my emergency stop, I would have just had to take the loss without waiting for the end of the day. So that $1,000 maximum loss on this hypothetical trade, it doesn't happen very often. Most of the time, my losses are going to be way less than 1,000 because coming down here to the 2 ATR emergency stop below my entry doesn't happen very often, about 5% of the time, but it does happen. So you have to have that in there. So that's why I use 2 stops, an emergency stop in case it happens. And if it goes down there at any time of the day, I would immediately get out because that $1,000 is the maximum I have decided that I'm going to lose on a trade. So I hope that helps. So with the under 30, over 30 rejection of the negative third ATR channel, I did buy this on Thursday at 339.90. Currently it's 350.12. It's up 2.92%. Let's see. That's how much it was, but yeah. So I'm up about 2.88% on this particular trade. I'm not up to the orange line yet, so I am not in trailing stop mode yet. Now, whenever I take an under 30, over 30 trade, I do have a rule that if it ever gets to my trailing stop level, if it ever gets back to my entry price, then I'm just going to get out at break even. And actually that happened on a trade, on TLT, which I'll go over as well. But I never want to let a winning trade, especially on an under 30, over 30, because under 30, over 30, there's a lot of downward selling motion. It does tend to bounce there, but not every time. And the under 30, over 30s are probably the scariest trades. They have a lot of potential for reward, but they're also a scary trade. And so when I have an under 30, over 30, I do not want to let that have a nice gain and then turn into a loss. Now, I mention this each podcast, but I like to play offense and defense with my trading. Now, we just talked about defense. End of day stop, close under the 30 RSI, emergency stop in case it goes down there, right? I don't want to lose more than 1% of my capital. That is defense. But offense is when things go your way. I like to sell a portion of any stock trade that goes my way. I like to take a little bit off, not the entire trade, just a portion. And what I do is I use the 0.45 ATR. So 0.45 ATR in this case is 431. So when I took this trade, so I bought here, right, 339.90. The next day I take the closing price, add the value of the 0.45 ATR, which is 432. That gives me my first profit target. I take the first profit target, I add the 0.45 again. That gives me the second. I take the second, I add the 0.45 ATR value to it again. That gives me the third. So whenever the market has a little bit of profit for me, I want to take a portion off. And so I take 10% of whatever position that I have, off if it moves 0.45 ATRs. If it moves 0.9 ATRs, that's 2.45 ATRs, I would take two. So I did hit a profit target on Goldman Sachs on Friday, and so I took some off. And if it goes crashing back down on Monday, at least I took a portion off at a profitable level. And so if it does go back down, I mitigate the risk. So it's very important to me to play offense and defense with your trading. So anyway, up 2.88% here, not to trailing stop level yet, but if it gets to trailing stop level, then I institute trailing stop, which means then if I get a close below the previous day's low, I would get out of the half position. So anyway, great start to this trade on Goldman Sachs, up 2.88%, and we'll see what happens with it next week. Facebook. All right, Facebook is a new position that I took on Friday. It's been a while since Facebook's been back over the 30 RSI. And the reason that I took this trade here, I bought this yesterday, Friday at 210.20. We went under 30, over 30. You can see the RSI right now is 3101. Monday, if this closes back below the 30 RSI, I would just go ahead and get out of the trade, because the reason I got in the trade was an under 30 over 30. So if that reverses, I will get out. Excuse me. So you can see I have my emergency stop here, 182.38. Chances of it going down there are very low, but if it does, I'm going to have to get out. I won't wait for the end of the day. If it gets there and I lose the $1,000, I'm just out of the trade. Unlikely that it will do that, but it's possible. So if I have to have it in place on the end of day stop, if it closes under the 30 RSI, I will get out, and it will not be $1,000 loss. I mean, it depends where it happens, but 95% of the time, your end of day stop will kick in instead of your emergency stop, and you'll take a much lower loss than your maximum allowed loss. Up here, 1.5 ATR trailing stop level up at 233. So if it gets up there, then I'll go into trailing stop mode. It also, similar with Goldman Sachs, went under the negative third, over the negative third. This is the negative third ATR channel here. So I like to take confluences and combinations of indicators lining up. Very rarely I just take an under 30, over 30. I need something in addition to that. The more signals that you have means the more buyers that are coming in. The more buyers that are coming in, the more likely you're going to have a profitable trade. So an under 30, over 30, under the negative third, over the negative third, and in addition to that, MACD crossed over. I would not take a trade just based on a MACD crossover by itself, but in conjunction with my other signals, under 30, over 30, under the negative third, over the negative third, plus the MACD crossover. That's why I took Facebook, and essentially break even so far. I just took this on Friday. But again, emergency stop down here, 2 ATR, the value of 2 ATRs, 2782, minus my entry price. That's my emergency stop, a close back under the 30 RSI. That's my end of day stop. The trailing stop level up here, which is 1.5 ATR trailing stop, 1.5 ATR value above my entry, I go into trailing stop mode, so that if once I get this high, it should not come back down to my entry price because we're outside of noise. We're outside of 1 ATR. 1 ATR is what you would expect a stock to move every day. That's why it's one average true range. That's the average. So I want to place my stops below noise or below the average, and I want to place my trailing stop level above. So that's why I use 2 for the end of day stop, or for the emergency stop, 1.5 up here for the trailing stop level. So this trade, just taken on Friday, essentially break even. All right. So I was talking earlier about on an under 30, over 30, if it moves 1.5 ATRs to the upside and then comes back to entry point, I'm going to go ahead and just get out. I did buy bonds back here on the 10th of February at 136.25. And why? Under 30, over 30. Under 30, over 30 on the day that I bought it. I bought it at 136.25. I placed my maximum or my emergency stop down here. Orange line up here is trailing stop level. So bought here 136.25. Next day went up. It went up nicely. It went up more than 0.45 ATR. So I did take some profits off, which I'm really glad. And this is a good example of why I do this. Next day, no profit targets went down. Next day went down, but held the 30 RSI. So I stayed in, up the next day, up the next day, up the next day, up the next day. Of course, on Friday, we had the big move up. And so I did take profits, 0.45 ATR profits. The next day here too, took some profits here, took some profits here, hit a big profit target at the open. And it did get to the orange line here at 138.88. So I go into trailing stop mode. Well, remember when I said if I get to 1.5 on an under 30, over 30, if I get to 1.5 ATR trailing stop level, then if it ever gets back to my entry point, I get out at break even. So that's what I did. I got out of this trade on Thursday at break even. See how it came back down here to break even. So does that mean it was a break even trade? No, it was a profitable trade because of the offensive moves that I use by taking partial profits. I took profits here, I took profits here, I took profits here, and then the remaining amount when it got back to my entry point, I got out of break even. So yes, technically break even, but no, in reality, it was a profitable trade because of the profit targets that I use. So I am out of TLT. All right. So those are the current, Goldman Sachs, Facebook, current daily swing trades. TLT, we just went over, out of TLT at break even. CarMax, another good example here. This one ended up being a loser, but not as much of a loser because of the 0.458 TR profit targets. I took this back here with an undercut of this low. We had a reverse V1 to the downside and right back up. That's why I entered the trade at 108.67. The next day it was up big, took 20% of the profits off because it moved my way, came back down, had another rally here, took profits off here, took profits off here. So at this point, I was out of about 40% of the trade at profitable levels. My end of day stop was a close below halfway of this washout bar. And then we went down, we went down, we went down, and I had to get out here about 60% of my remaining position for a 7.33% loss, but it really wasn't a 7.33% loss because I got out of about 40% of my position at profitable levels. So that if you have a big move down, you are so glad that you sold some at profitable levels because it helped mitigate the loss. And then I got out, it went down, reversed back up. That's how it goes, right? I had to follow my rules. And so out of CarMax on the remaining portion at 7.33% loss. Tesla is another good example of the importance of using 0.45 profit targets. I bought Tesla back here on the 28th of January. Lots of confluences here. Bounce at the 250, rejection of the 200, V1, rejection of the negative third ATR channel. Nice confluence of signals. Bought this at 834.46. Next day it bounced like a champion. Took 3 profit targets off at profitable levels. Then we move sideways. My end of day stop here is a close below the 200-day moving average. I have my emergency stop down here as always. I have my trailing stop level up here, 1.5 ATRs from my entry point at 938. Well, the very next day I went into trailing stop mode. So what does that mean? That means if I get a close below the previous day's low, I will get out of half. Never happened, but it did happen here. You see how we closed below the previous day's low, but it was at profitable levels. So I took profit targets off here, 0.45 profit targets off here, and then after reaching 1.5 ATR trailing stop level, then I had to close below the previous day's low. I sold half, which I'm glad I did at 907 because I got in at 834. My end of day stops closed below the 200. We came back down. We held the 200-day moving average. Then we went up and up again, taking more profit targets off. And then we went down. And then on the 22nd, 2/22/22, it closed below my end of day stop at 822. So was it a profitable trade? It was a profitable trade. Just looking at it at face value, I got in at 834.46 and got out at 822 even. So technically, yes, a loss, but I had very few shares left because I sold into profits. I had a trailing stop methodology that I used here, so they were all at profitable levels. So all in all, the Tesla trade did end up positive because of the approaches that I used with selling into strength, having trailing stop levels. But ultimately, the remaining amount of Tesla I got out at 822 even because of my end of day stop, which is a loss of the 200. Then we had the down and then the down, and I was like, wow, am I glad that I took my end of day stop, which was a close below the 200. We have rallied back up. We're still under the 200. So getting back into Tesla, I would not get back into Tesla unless I at least had a close above the 250 day. All right, so those are the trades on the weekly, on the daily time frame. On the weekly time frame, I did take a trade on Friday. I like to trade dailies. I like to trade weeklies. I like to trade monthlies. I think by doing so, you spread yourself out among different time frames, and I really enjoy that. It's one of my big philosophies in trading is trade as many different time frames as possible, trade as many different markets as possible, and trade as many different systems or approaches or strategies as possible. So why did I buy Twitter on Friday on the weekly? Remember, weekly bars close on Friday, so I wait for the end of the bar to close. Well, here we go. I did buy Twitter at 35.24. On Friday, we had an under 30, over 30. These work on daily, weekly, monthlies, intraday. So we had an under 30, over 30. That's my main trigger point. In addition to that, we bounced at the negative third ATR channel. That's an important level. We had a V1 as well. Bar 1, bar 2 goes under bar 1 and then closes above bar 1 close. That makes it a V1. And then on top of that, we tested the low of the previous range here on last week and then reverse back up. So under 30, over 30, V1, bounce at the negative third ATR channel, tested the previous range, and then so great confluence of signals. Is it going to work? I hope so. I don't know though, right? This is a weekly bar, so I will make my end of day decisions, end of week decisions next Friday because these are weekly bars. But I have my emergency stop down here, 2602, right? And you're like, wow, that's so far down. Are you only going to lose 1,000? Yes, because let's do the math. So $100,000, 1% is 1,000, $1,000. Now, this is a weekly trade, so the value of the 2 ATR is going to be very big, which means my position size is going to be quite small, but you have to have smaller positions on weekly bars because weekly bars move so much larger than daily bars. So 1,000 divided by 922, 108 shares if you were using $1,000 stop loss. Now, if you're using $50,000, 1% of that's 500. Don't use $1,000 stop loss. It depends on how much money you have in your account. If it was a $50,000 account, 1% 500. So if it gets down to the maximum, if it gets down to my emergency stop, I mean, that's what, 26%? It seems like you would lose a ton of money, but using the 2 ATR to position size, you would still only lose the $1,000. My end of week stop is a close below the 30 RSI because that's what got me into the trade. Right now it's 30.84, very close to the 30 RSI, gives me a good risk to reward ratio, especially in light of the other confluences of signals. Bounce at the negative 30 ATR channel, test of the previous low, plus the V1, plus the under 30 over 30. So on Friday next week, if anytime during the week it gets to my emergency stop, I just get out. I don't wait for the end of the week. But if it closes here at 29.99, I'll get out hopefully for a small loss, and then I have my trailing stop level up here, 1.5. And if it moves up, I will take partial profits, 10% of my position whenever it moves 0.45 ATRs from this week's close. So just about break even on this one. 35.24 is 35.29. So up a little on the trade, but essentially break even. Okay, IWM. I did buy IWM back on 128.22. What were the signals? Under 30, over 30, rejection of the negative third ATR channel, rejection of the 100-day moving average, which I like that on top. So those are the entry signals. 139.20. Have my emergency stop down here. Have my trailing stop level up here. And the next week, it went up nicely. I took some profits off. Next week again, took some profits off. You can see we got to trailing stop level. So now I'm just looking for a close below the previous day's low to enter the trade. Oh, I'm sorry. No, it did not quite get to the trailing stop level. Sorry. Otherwise, I would have gotten out here at break even because it moved 1.5 ATR, but it did not. I forgot to mention that. Sorry. When I looked at it, it looked like it, but no, it didn't quite get there. And actually in this case, it turned out, because had it got there, then if it got back to my entry point, I would have gotten out break even. So anyway, so far so good on this trade. It is up 4.71%. All right, last but not least, monthly bar, monthly charts. I did take Southwest Airlines at the end of last month with a V2 entry trigger. Here's bar 1, here's bar 2, here's bar 3. Bar 2 goes under bar 1's low. Bar 3 closes above bar 1's close. It also rejected the 100-month moving average. That was my entry trigger. I got in at 44.74. It's 45.14. Emergency stop down here. End of day stop will be a close below halfway of the washout bar. Whenever you take a V1 or a V2, your end of day stop is a close below halfway of the washout bar. And by the way, if you go to my YouTube channel in the lessons section, I have a lesson there about V1s, V2s. They're a big part of my trading. They're a huge part of my trading, and they're great setups, and you should learn more about them. And so go to my channel, my YouTube channel, watch the V1. Excuse me, I feel like I'm losing my voice a little bit today. Watch the V1 and V2 entry signals, and if you have any questions, let me know. But it's a great approach. It's a big part of my trading, kind of the bread and butter of my trading. So this particular trade, not up much, but up 0.95% on the trade. So happy with that. So those are the trades, everyone. The daily, the weekly, the monthly, the trades I got in, the trades I'm still in, the ones that I had to get out of. But, trading is not, every position does not go your way. There's going to be weeks where I have lots of winners. There's going to be weeks when I have lots of losers, but that's just a normal part of trading. The most important part is that you keep your losses small. You get out quickly when you're wrong, and you will be wrong very, very often. And when you are right, you have to let those profitable trades, give them some room to grow, because you need those profitable trades to pay for all your little losses. All right, so those are the trades. Let's head over to trader psychology. As I mentioned, trader psychology is so important. The ability to create a plan, follow your plan, is so important, everyone. And there's some really good Facebook and Twitter channels that do a lot of work, a lot of great work, post these sayings for us each day, good trading words of wisdom. This is from Money Trade Edge, Better Thinking, Better Trading. This is a great channel over on Twitter. Please go follow him. Just great advice every day. And let's see what Money Trade Edge has to say today. Trading is not a hobby. Many traders try to win the game without self-discipline, strategy, vision, patience, consistency. Trading is a business, not your hobby. So true, everyone. It is not something that you can just fool around with a little bit. In my opinion, it should be, you should spend as much time, as much dedication as you can to trading. And outside of having self-discipline, strategy, vision, patience, consistency, work on yourself. Review your trades in your mind. What did I do right? What did I do wrong? How can I get better? Do some meditation, do some presence work. It's an important thing. I've added this to my trading, and I'm really glad that I did. When I was starting trading, I would hear people talk about journaling. I would hear them talk about mindfulness, meditation. I was like, what? I don't need that. Yeah, you do. To do the very best as a trader as you possibly can, you need to eat healthy, you need to exercise, you need to get enough sleep. Of course, as Money Trade says, you need self-discipline, hugely important. You need a strategy, of course, vision, patience, very important, and you need to be very consistent. But I would also recommend journaling. I would also recommend reviewing or debriefing in your mind each day what you did right, what you did wrong, how you can get better. And I think this is the most important part of this post. Trading is a business, not your hobby. Treat it as a business. Take it seriously. That's how you're going to be a long-term profitable trader. So thank you, Money Trade Edge. Please follow Money Trade Edge over on Twitter. Great, great, great post. Helpful for me. Hope it's helpful for everyone else. All right, so we talked about Frank and his trading poems. I thought this was a great one. You can follow Frank at FrankOD over on Twitter. He posts a trading poem every day. I think he's going to put out a book. We've discussed that. I think he's going to put out a book of trading poems, which I think's wonderful, because what Frank does is talk about, he writes his poems basically based upon what's happening in the market. So it's relevant, and I like it. Today's market poem by Frank. Steady as she goes is a phrase we all know, especially when news and markets come to blows. But it's also a time to grow as we see the power of our rules at work and on show. We take it easy and a little bit slow. So great. So great. When we have headline risk like we've had in this market, boy, it can really move the market around, and you have to take a different approach when you have this volatility. Using the 2 ATR will save you a lot with your position size, because it bases it upon volatility. But one more time, steady as she goes is a phrase we all know, especially when news and markets come to blows like they have recently. But it's also a time to grow as we see the power of our rules at work and on show. We take it easy and a little bit slow. This part, it's time to grow as we see the power of our rules at work and on show. Well, taking the profits that I took with my 0.45 ATRs and then going into trailing stop mode and those triggering and locking in portions at profitable levels, in this kind of market, those kind of rules help so much. And when I read this, it resonated with me because it did show the power of my work, of my rules. It showed the power of them. We just take it easy and a little bit slow. So take things slow, everyone. If you've had a bad week, if you've lost money, please do not try to go back and make it back quickly. For some reason, it doesn't work. The trading gods do not like it. Just reset, restart, act like it's your first new day of trading. follow your rules, even stricter, trade less. There's a lot of psychology going on after you've had a big loss. A lot of emotions are stirred up. So if you have had losses last week, please take my advice or suggestion. Be very, very careful. I would recommend trading less. I would recommend trading smaller amounts until you can print some black ink or profitable trades and get your confidence back. So thank you very much, Frank. Please follow Frank at FrancoD over on Twitter. All right. Well, let us take a look at the dailies for next week. Go down through my watch list and we'll see if there's something that looks interesting for next week from my perspective. And let's start with Apple. All right, so a lot of these stocks are going to show a big move off the bottom. Now, this concerns me. I would be careful of chasing these positions at this moment. I mean, I don't know. It could continue right back up. But on Apple here, the only thing next week that I could even possibly see would be a 520 crossover. I don't think it's likely. I don't know. I would have loved to bought Apple down here at the 200-day moving average. You can see it got very close. But to the upside, a 520 crossover would be a valid signal for me with Apple. Or conversely, if we come back down, test the 200-day moving average, then that would look good. We have a lot of double bottom bullish divergences here. Here's a low with deep red MACD bars. We rallied to some green MACD bars. We came back down. We tested this low with less red MACD. So that's a double bottom with the bullish divergence. And it worked just fine, but I'd be very careful. There's been a lot of movement off the bottom here. I guess I would add a higher low V1 or V2, meaning that I would need to see the price rally into the value zone, then pull back, test the -1 ATR channel, look for a higher low V1, V2. So actually a higher low V1, V2 is probably the most likely trade on Apple, but barring that, a 520 crossover or a pullback to the 200-day moving average. I'm not going to mark Apple because I don't see any of that happening next week. I could be wrong, but I want to focus on the ones that look more likely. Adobe went under 30, over 30. I'm not going to chase it here. Same thing with Apple. If we pulled into the value zone, then pulled back, retested the -1 ATR channel, which is the green line, then had a V1 or a V2, I would be interested in that. Or if we came back down, went back to 30 again, I don't think it's likely, so I'm going to move on from that. AGQ, which is silver, double leverage silver. I don't really see anything on AGQ. Yes, if we had a close back above the 200, that would be technically a legitimate entry point, but it's so far up here, I don't buy above the second ATR channel. This is up at the fourth ATR channel. Remember, 92% of prices fail at the -3rd ATR channel or at the +3rd ATR channel. So I don't see anything here. A 520 cross under, you can see the 5 right here and the 20 here. If it were to cross under and then cross back over, that would be likely entry, or that would be a valid entry point, but I don't see that really happening. We had such a big rally off the bottom that it's taking away a lot of trades. Advanced micro devices. Okay. Don't really see anything here that looks interesting to me. Thursday we had a close back over the 200-day moving average. If advanced micro devices were to come back, test the 200-day moving average, that would be something I would be interested in. So I will mark AMD. Amazon, same pattern. We came back into the value zone. If we pull back, test this -1 ATR channel here, then had a V1 or a V2, I might be interested. But I think I'm just going to pass on Amazon. ARC, same pattern, moving into the value zone if it were to pull back, but or test the 30 RSI, but it's quite a long ways away from the 30, so I'm not gonna go over. I'm not gonna consider that one. Boeing, again, the same. I really don't see anything here on Boeing for next week. Alibaba is interesting. Let's see. Alibaba on Friday, right now it's 35.47. At the low, it got to 32.62. So yeah, Alibaba looks somewhat interesting to me. It rejected the negative third ATR channel. It's 35.47. Next week, if we went under 30, over 30, again, that would interest me in Alibaba. BITO, which is the Bitcoin ETF, don't really see anything here. Berkshire Hathaway, boy, what a big move up here. Don't see anything that interests me or is likely for next week. And we're going to be getting a lot of this going down through this watch list. Budweiser, my gosh, they must have had good earnings because it took off. I would never chase that. I mean, it looks very, very strong. My gosh, it's up 6.41%. But how would I be, what do I need Budweiser to do for me to get interested in Budweiser? Possibly a pullback to the 200-day. This looked like such a strong move. I don't think that's likely, so I don't think we should even waste the time on that. Beyond Meat, well, Beyond Meat did have a valid signal on Friday, an under 30, over 30, a rejection of the previous low, but we rejected the negative third ATR channel above here. Don't really like that. It was down 9.2%. I think I'm going to take Beyond Meat off of my watch list. It's been a very volatile stock, so let's move on from Beyond Meat. Caterpillar, V2, do you see it? Bar 1, bar 2, bar 3, bar 2 goes under bar 1, bar 3 closes above bar 1's close. It also went under 30, over 30. That's a nice confluence of signals. So you might ask, why didn't you buy it? Well, I didn't buy it because I usually only take one trade per day, and I took Twitter because it had, I like the structure of the trade better. So, you know, when I go through these potentials for next week, if they trigger, I don't take them all. My policy is I take one trade per day. I take the very best one. So yes, this would have been legitimate on Friday. I didn't take it because I like Twitter better. But the V2 under 30, over 30 plus rejection of the negative third ATR channel. If Caterpillar next week moves back down, goes under 30, over 30 again, that's where I'd be interested. So I am marking Caterpillar. CCJ, nice move over the 200-day moving average. That would have been a legitimate entry, but it's not. You see, with the close was so far away from the 200-day moving average. So far it would have worked out, but I like to trade. I like to take my under 200s, over 200s, or under 250, over 250s with a better risk to reward ratio. Here was one with the close under the 250 and over the 250. Well, this one would have worked out great. The risk to reward wasn't so bad, but I took something else, so I didn't take it. So if Cameco came back to the 200-day moving average, rejected the 200-day moving average, that would be very interesting for me, so I'm marking CCJ. Carnival Cruise Line had a V1 on Friday, which would have worked out here. We're back in the value zone. There's a lot of profit from the people that bought it down here. I imagine if it starts moving sideways or gets a little weak, you will have a pullback, but don't see anything super likely right now on Carnival. DoorDash, like everything else, had a nice big move off the bottom. Hey, good time to point out a double bottom with a bullish divergence with a missing right shoulder. Here we have a low that had red MACD bars. We rallied into green. Then we came back down on Thursday and went below the previous low. But you see how there's no red MACD bars here? That's very bullish. That's called a double bottom with the bullish divergence with a missing right shoulder. You know, I studied one-on-one with Dr. Alexander Elder, and he loves that setup. You might say, why didn't you buy it? Well, because it was so far extended and chasey. We are in the value zone now. If we were to come back test the low of the -1 ATR channel, then have a V1 or a V2. That would be interesting for me, but I'm not going to mark this one down because it doesn't seem super likely. Who knows? But I just want to show the trades that are closer to triggering. Dow Jones 4302. If we were to pull back to the -3rd ATR channel, pull back to the 30 RSI level, I'd be interested again. Doesn't look very likely. I mean, it could happen, so not going to waste time on that one. Walt Disney. Don't really see anything on Walt Disney here either. DocuSign. Yeah, don't really see anything here on DocuSign. This is going to be common theme here today because of the big moves that we've had. Etsy, wow, look at Etsy. Nobody wanted it. Everyone wants it. Don't see anything likely for next week on Etsy. Facebook, well, I like this setup. That's why I did buy it on Friday. Again, under 30, over 30, under the -3rd, over the -3rd. Place my emergency stop, place my 1.5 trailing stop level. If it closes below the 30 RSI, I will get out. But this one is already triggered. FCX, way too extended. I do not like buying. I like to buy in the value zone, sell above value, or I like to buy below the value zone, sell in value. This one way too extended for me to get interested. I know all these charts look the same. Fiverr, no, do not see anything interesting here. Gold, well, boy, gold has really rallied. This was a great entry with the close under the 200 and back over the 200. Had a huge gain up, big reversal bar down here. Don't see anything likely for gold. But if we did get back to the 200-day moving average for whatever reason, that would be a great place. It did respect it last time. I think it's unlikely that we'll get back there, so I won't mark that. GNRC. We had a 520 crossover here. It's up at the 2nd ATR channel, too extended. Really what I would be looking for next week on GNRC would be at least a pullback to the value zone. Have it stop going down, look for some sideways motion, then take a V1 or a V2, but it doesn't look likely. Google. Well, Google's an interesting choice here. We are a close under and a close back over the 200 does make sense on Google. So next week, if we close back above the 200, I would be interested in entering Google. If we come back down, I prefer it to come back down and retest the 250. So I will mark this one. Either a close back above the 200 gets me interested, or if we head back down and retest the 250 with a good risk to reward ratio, then that would interest me. So I do like Google here. Goldman Sachs, of course, I took that on Friday or on Thursday. Won't mark this because I'm already in the trade. Really glad it's doing well so far. Home Depot, my gosh. It's 2773 RSI. If we could next week go under 30, which we are under 30, and then close back above, that would be interesting to me. And if it does close back over the 30 RSI, it's probably going to close back over the -3rd ATR channel. So this one I am going to mark because it is likely for next week. I would be interested if it closed back above the 30 RSI. IBB had a nice under 30, over 30 that continued. This would have to come back to the 30 RSI. I don't think it's likely, so I won't mark it. INDA, whew, don't really see anything here. All these charts look the same, don't they? Don't see anything on Intel. IWM on the daily, no, nothing. Of course, I did have that on the weekly, right? With the under 30, over 30 back here on the 28th, but on the, and nicely positive, but on the daily, too extended for me to get interested in. Johnson & Johnson, this would have been a legitimate entry on Friday because it did close under, close back over the 200-day moving average, which is definitely positive. I did not take it because I took Facebook and I only take one per day. But next week, if Johnson & Johnson does have a close back under the 200 or an intraday rejection of the 200, that might get me interested. So I will mark J&J. JO, which is coffee ETF, 4406 RSI. Don't really see anything here. CarMax, that's the trade I had the loss on. Don't see anything here. We came from so low. Now there's a lot of profit here. Like I just mentioned, if the market gets weak or goes back down, the people that bought down here will most likely sell. That will drive it back down. Doesn't have to, but very often it does. But I don't see anything here on CarMax. Coca-Cola, big, huge move. Definitely would not chase anything like Coca-Cola at this point. Lockheed Martin, wow, look at Lockheed Martin, everyone, of course, with what's going on with Russia and Ukraine. There's been some interest in the military contractors. Big, huge day up on Friday. Boy, this would have been a nice trade on Lockheed Martin with the close under, close back over the 200. It held and it rallied. So nothing on Lockheed Martin. Southwest Airlines, I already have on the monthly. Don't see anything here on the daily. Lyft, do not see anything. You know, for Lyft to come back down, test this previous low, test the 30 RSI, and it would also have a double bottom with the bullish divergence. That would be interesting, but I don't see that as likely, so I'm not going to mark it. MasterCard, I do like MasterCard. Next week, if we could come back down, if we have a bit of a pullback, I looked at the over weekend futures, they are down now. That could change by Monday, but I would like another option or opportunity to get back into MasterCard. Either if it came back down, tested the 250, came back down, tested the 200, or went under the 200, over the 200, under the 250, over the 250, and I still had a good risk to reward ratio. So that does look like it's likely. I will mark MasterCard. McDonald's would have been a nice little entry on Thursday with a close over the 200-day moving average, giving you a good risk to reward ratio. Also has a double bottom bullish divergence. Here's the low with deep red. We rally into green. We come back down. We test the low with less red. That's a double bottom bullish divergence. All that means is that the second leg down had less selling momentum than the first, and kind of the implication there is it would go up after that. So that would have been a nice entry on Friday. I took Goldman Sachs instead. But if McDonald's were to come back down, test the 200, that would be interesting. It is possible, so we will mark that. Merck, so Merck did close over the 250. That would have been a legitimate entry there. If we could close back over the 200, which is the black line on Monday or anytime next week, that would be interesting. So I will mark Merck. Microsoft, this would have been a great entry on Microsoft on Friday with this close over the 200, a close under, close back over. Your risk to reward is very good. So just a small close back under the 200 would be legitimate. I will mark Microsoft because if we do go down, if we close back under the 200 and then back over, that would be very likely that would happen. So I will mark that one. Netflix, nice little rally off the bottom. MACD is positive, was up on Friday. Don't see anything there though. Nike, probably nothing there. It's 37.71. We'd have to come all the way back to the 30 RSI to get interested. Don't know if that's going to happen, but I think I'm going to move on from that. Nvidia, if we were to come back down, test the 200-day moving average, that would be a great entry point on a company like Nvidia, so I will mark Nvidia. Pfizer, big move off the 200-day moving average. Chasey, don't really see anything on Pfizer. PKI, do not see anything there either. PLTR, not much. Philip Morris, my gosh, look at this. Everybody wanted it, nobody wanted it. Don't see anything here on Philip Morris. PayPal finally got a move back up. This would have been a legitimate entry on Friday with an under 30, over 30, under the negative third, over the negative third. I will mark PayPal. It's 32.93. It's likely that we will come back, test the 30 RSI level. That would get me interested on PayPal. The Qs, don't really see anything on the Qs in particular here other than an under 30 over 30 or a 520 crossover. That doesn't seem likely. Rio Tinto, nice huge move up on Friday, but I don't see anything there. Shopify, I think, yeah, I will mark Shopify. It went under 30, over 30. We're near the negative third ATR channel. There is a double bottom with a bullish divergence happening here at the moment. And here we go. Here's the low with deep red MACD bars. We did rally into green. We did come back down, went equal to this low or lower, then had a signal. The signal would have been Thursday, under 30, over 30, under the negative third, over the negative third, plus the V1. Not going to get into it now, but I did mark it because next week, if we come back down under 30, over 30, and test that negative third ATR channel, that would be a good entry point. So I did mark that one. SIVB, do not see anything there. Snapchat, do not see anything on Snapchat. Virgin Galactic, nice rally off the lows there, double bottom bullish divergence. Don't see anything likely there. Let's take a look at the SPY. This would have been a legitimate entry signal on Friday with a close back over the 250. Very good risk to reward ratio. I took Facebook instead, but this would have been legitimate. Close under, close back over the 250. Very nice. It's likely that we would go back down next week and close back under the 250 and then maybe back over, so I will mark that. Teladoc, do not see anything there. Teradyne, don't really see anything there either. Bonds, got out of bonds at break even, don't see anything here. Tesla, I will mark Tesla. If we go back down, test the 250, that would be a good entry point. This is a legitimate entry point that happened on Friday with the close back over the 250 with a good risk to reward ratio. So next week, if we come back down, test the 250 again, then I would be interested. If we close back over the 200, I would be interested. Twitter on the daily, don't see that. I did take that, I took that on the monthly, right? Yeah, I took that on the monthly, under 30, over 30, V1, rejection of the negative third ATR channel, test of the low. So it's interesting how on the weekly, on the daily, I'm not getting into this because it's extended, but on the weekly, it's not extended. So you have to position size correctly for your time frame. And yeah, on the weekly, it looks not extended. On the daily, it looks extended, and it is. So very likely it would come back down, but on the weekly, I don't mind because my stop is so much further away, and I have fewer shares essentially. Unity Software, I don't see anything there. UAL, I don't see anything there. Natural gas, well, I will mark natural gas because it is possible that we would come back next week, test the 200-day moving average. It did hold last time, so I'll mark that. UNH, do not see anything there. Oil, nope. Dollar, nope. VIX, VIX has been pretty crazy radical, but I don't see anything here. Verizon, nice close under, close back over the 200-day moving average. I'm going to skip that one. WBA, don't really see anything there either. Walmart, same, don't see anything likely. XLE Energy, don't see anything there. XLF, I will mark XLF because we had a nice close under, close back over the 200. Seems chasey to me at this point, but next week if we came back down and could retest that 200, that would be interesting. XLRE, I will also mark XLRE. We had a close under, close back over the 250. I didn't take that because I took Facebook instead. But if we were to come back down, close back under the 250 and then back over, I would be interested in that. So I'll mark that. XLU, nice close back over the 200-day moving average. I will go ahead and mark XLU in case it does come back down to retest that 200. XLV, this is legitimate. It did close back over the 200-day moving average, so I will go ahead and mark that because next week if it closes back under and then back over the 200, as long as it gives me a good risk to reward ratio, that would be interesting. You're like, why didn't you take it? Well, I took it because I took Facebook instead. Alternatively, if we move back down, a key off the 250 would be interesting. Exxon, I don't see anything there, and Zoom, I don't really see anything there. So let's do a review quickly of the flag signals for next week. And again, if all these were to trigger on the same day, I would not take them all. Remember, I take one trade per day. I just want to be very, very clear with that. And if they all triggered, I would pick the one that had the best risk to reward ratio. Advanced micro devices. Is it possible next week we would come back down, test the 200, give me a better risk to reward ratio? Yes. So that's what I'm interested in, is a retest of the 200 or alternatively the 250. Alibaba, 35.47. If next week we go back under 30, back over 30, retest the negative third ATR channel, I would be interested in that. Caterpillar, it's 31.02. So yeah, and it's near the negative third ATR channel. So next week, if we went under 30, over 30 again, I would be interested in CAT. Cameco, nice big move over the 200. Not likely, but if it does come back down, test the 200, give me a good risk to reward ratio. That would interest me there. Very interested in Google with a close back over the 200. If it moves up, or if it goes back down and retest the 250, that would also be legitimate. So it either needs to go up higher above the 200 or needs to go down lower, retest the 250. Home Depot, if we could get back over the 30 RSI, that would be an interesting setup for me. It's 27.73, so not there yet. Johnson & Johnson, close back over the 200. If it were to retest the 200, and give me a good risk to reward ratio, or retest the 250 and give me a good risk to reward ratio, that's where I'd be interested. MasterCard, retested the 250 or 200 would be interesting for me next week. McDonald's, a retest of the 200. Merck, a close over the 200. Microsoft, if we were to close back under and then back over the 200, that would be interesting. Or if we went lower and we tested the 250, ideally, this is the one that I want. I would like it to come back down, test the 250 because it's lower inside of the big bar. It seems a bit extended. So a close under 200, over 200, or a retest of the 250. Nvidia, a retest of the 200. PayPal, 32.93 RSI. If we were to come back, retest the 30 RSI and then back over. Shopify, 33.99. So if we move back down and go under 30, back over 30, that would be ideal. SPY, again, this would have been legitimate on Friday. But what I would look for, two things next week. If we close back under the 250 and then close back over, or a close back over the 200. That's a good back-tested approach to trading SPY. Tesla, a retest of the 250 or a close back over the 200. UNG, a pullback to the 200. XLF, a retest of the 200. XLE, a retest of the 250. XLU, a retest of the 200 or alternatively of the 250. And XLV, let's see, 200, 130.89, 130.95. So it did close back above the 200. That is legitimate entry. Really what I would be looking for, because of the extended move here, would be a retest of the 250. So that's what I am looking at for next week. I hope that's helpful. Just want to remind everybody, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I'm good at it. I teach a wonderful course. I've taught people from all over the world. Like I said, it's a one-on-one course in the evening time via Skype. I teach you all 5 of the different trading approaches that I use. I teach you step by step exactly how to position size, emergency stops, end of day stops, profit targets, overhead resistance level, trailing stop level. It's a great course. It's 15 hours. Each session is 3 hours, and there's 5 sessions total. That's where you get the 15 hours. It does cost $1,750, but I promise you it's worth every penny. I think the best way to learn anything is to have a coach or a mentor walk you through, ask you lots of questions, be there for you, and that's why I provide this format. So like I said, $1,750 is a lot of money, but it is an investment in yourself. It is a skill that you can use for the rest of your life. So if you're interested in doing this with me, and I really recommend it, I promise you you're going to be a better trader, just send me an email. The email is in the link of the description of this YouTube video, and just say, hey, Greg, I'm potentially interested in taking your course. I'll reply and say, great, thanks for saying hi. Let's set up a Skype call. Skype call is free. I promise you it's not a sales call. All I want to do is get to know you a little bit better, talk about your trading, your challenges, your goals. And then it's a great time for you to ask me questions. And then when we're done with the call, I will not contact you. You think about it as long as you want. And then if you decide one day, hey, today's the day I do want to study with Greg, just send me the email. We'll get it scheduled and away we'll go. And I promise you, you're going to be a better trader. I promise you, you're going to be glad that you took the course. Secondly, if you like online courses, I have a great online course called The Deep Dip by Stock Trading Strategy. It's at udemy.com. The link to my course on Udemy is in the description of this video as well. It's a great course. I have sold so many courses all over the world. Such great reviews, such great feedback, and it's so affordable. It's like $12 or $15 on Udemy. But don't think because it's a low price, you're not getting a lot of content. There's so much content. 9.5 hours of video, 26 videos, 15 study guides. I teach you step by step how to trade the deep dip buy stock strategy. So, if you have some extra time, you have 12 or 15 bucks kicking around, click on the link in the description for on the Udemy link, take the course. It's going to make you a better trader. The one-on-one course, obviously a lot more involved, more expensive too, because I teach you all 5 of the approaches. But, if you're not in the financial position to take the one-on-one course, do yourself a favor and at least take the Udemy course. And then lastly, if you like today's podcast, I really would appreciate it if you could hit the thumbs up button, maybe share the podcast. Hitting the thumbs up button does really help let YouTube know that there's some valuable content here, helps to keep the channel around, helps them sharing it. So if you did find anything valuable today, I really would appreciate it if you could hit the thumbs up button before you leave or share it with your friends on social media. All right, so I think that's it. Hope this was helpful. Hope you have a good trading week next week. Hope you enjoy your weekend. Get out there, do something fun, do some deep breathing. Take my advice. Think about your trading. Go for a walk or just sit quietly. Think about your trading. Think about what you're doing right, what you can improve on. It's an integral part of your trading. And if you have any questions, leave them in the comments below. I'll do my best to answer. And I think that's it. So have a great weekend. Be good. Be safe. Oh, please try to go out, do something nice for another human being today. It will make the world a better place if we were to all do that. If you could also go out, do something nice for an animal, they appreciate it. I was raised with lots of animals, very close to animals, and they appreciate random acts of kindness as well. So, you have to give to get. Go out, do something nice for a human today. Go out, do something nice for an animal today. And I promise you, it will come back to you. All right. So I think that's it. On the way out here, I have to run the U.S. legal disclaimer. But thank you so much. And we'll see you next weekend. And if you have any questions, leave them in the comment below. You can email me as well. All right. Okay. Take care, everyone. We'll talk to you later. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.